This is Financial Standard, the definitive source of news, thought leadership and analysis for Australian wealth management professionals. Financial Standard. Take the lead.
Hello and welcome to the Financial Standard podcast. My name is Eliza Baven and I'm a senior journalist here at Financial Standard. After 15 years in politics, most recently as Assistant Treasurer and Minister for Financial Services, Stephen Jones announced that he would be retiring from politics at the next election. As Assistant Treasurer, he has focused his work on combating scams, protecting workers' superannuation, making financial advice more accessible and affordable, and strengthening consumer protections. And today, as we approach the federal budget, I'm pleased to welcome Minister Jones to the show. It's great to have you here.
Hey, good to be with you.
So I'd like to start by talking about your work around financial advice. You've done a lot of work in this area, especially recently. But what would you say has been your biggest achievement?
Look, I'm really pleased that what we've been able to do is stem the exit of advisors from the industry. When we came in, there had been a free fall in the number of financial advisors. They'd halved over the previous 4 or 5 years, and we were at a crisis point. We put in place some measures, including creating a new class of experienced advisor so that around about 1,600 advisors would otherwise have been kicked out of the industry within the year. So we put that in place. We've done a lot of work to reform the entry pathways, and I've announced some changes in that area. They'll be legislated in the new parliament so that we can get more people into the advice profession and more pathways for entry. I think that's all important work. But the big nut to crack is how all of that I would characterise as just stopping the crisis. The big nut to crack is how we ensure that more Australians have access to financial advice and information, and that's what the second tranche of our reforms are all about, and that is about a new class of advisor. It's about reforming and improving and updating the best interest duty. It's about removing red tape, which is an obstacle to advisors taking on more clients. It's about ensuring that we have technology-neutral legislation. In short, it's about ensuring that there are more safe doors for people to enter to get financial advice and information. And that also includes ensuring that we have a new class of advisor which is able to give limited but quality advice, particularly in relation to retirement issues.
Well, yes, I mean, the delivering better financial outcomes reforms have been pretty significant. And as you mentioned there, really help to ensure that there's enough financial advisors to meet the needs of Australians. And you have said that Tranche 2 remains a priority before the next federal election. Obviously, the election has not been called yet, but when might the industry expect that to be released?
We'll have the draft legislation or the next tranche of draft legislation out before the election so that we can pore over it. What I'm trying to do as a custodian in the role is ensure that we don't lose momentum and that we have as much of this done before the election as is humanly possible. It's really critical. We've put in a hell of a lot of work over the last 3 years, and my government is committed to seeing that work through. We want to ensure that as a new minister and a new parliament approaches their role, all of that early work has been done so that we're just down to the job of getting laws through Parliament and getting those changes enacted as soon as possible. If we've done all that, the work around consultation, policy development, legislation drafting, that just makes that next step so much easier.
And I also wanted to touch on the compensation scheme of last resort, just because it's such a big thing for advisors. And Treasury announced that it will launch a review into that scheme, especially after it was revealed that financial advisors will have to pay around $70 million, which is way over the $20 million cap. Where do we kind of go with that review? Do you see ways in which we could improve that scheme that will ensure that consumers are protected, but also not put too much pressure on the industry?
Yeah, I called a review of it because I don't think we've got stable settings there. I don't think all the arrangements in place are durable and will ensure it works for the long term. And that's what we absolutely need, something that is sustainable for industry, that has all the right incentives in place and provides the necessary protections for consumers. And I think across each of those areas, we haven't got the mark right. This particular reform has got a long history. It was first proposed by the Ramsay Review close to a decade ago now. Was recommended by them, was picked up by the Hayne Royal Commission as one of their key recommendations. At the conclusion of that Royal Commission, it was introduced but not legislated by the former coalition government. And one of the first things we did when we got back into government was to complete that task. The legislation was, in all material respects, bipartisan. But I think everyone agrees it's not operating in exactly the way we intended it to, and that's why we're having the review, so that we can sort out some of the issues that are either unintended or not operating properly. And that'll be an important job of work for the new Parliament to deal with as well.
I also wanted to speak about the superannuation industry. There has been a lot of scrutiny around it recently, particularly to do with governance. And obviously, Treasury announced new mandatory minimum service standards. But do you think that that's enough given the large-scale issues with consumer service and delayed claims handling?
Yeah, nobody was talking about this issue till I bursted onto the agenda back in 2022. It was my view that we've done a lot of work to improve the performance of funds as fund managers and growing wealth. And I think our industry has done a good job over 30 years of turning a small contribution from people's fortnightly salary into a large retirement nest egg. They've done a very good job of that. But what they haven't set themselves up to do properly is ensure that they're providing the service and the communication and the advice to members that increasingly they will need. By the 1st of January next year, 1 in 5 Australians will be over the age of 65. 1 in 5 over the age of 65. And thanks to superannuation, they've got a decent retirement nest egg. It's our job to ensure that they are making good decisions with it and that their funds are dealing with them respectfully and efficiently and effectively. And if insurance claims, which have been a really sore issue over the last few years, aren't being dealt with, then that's just not good enough. And people are going to look at their superannuation fund in exactly the same way that they look at any other financial institution, whether it's their bank or their insurance company, and they'll have the same expectations on their super fund as they have of all of those other institutions. And knowing all of that, funds have got to come a long way in a short period of time to improve the way that they deal with their members, because if there's an issue now, it's only going to get bigger over the decade ahead as more and more Australians rely on their superannuation as an increasing part of their retirement income.
And do we expect that the financial accountability regime, which came into effect for the superannuation industry on the 15th of this month, how do we expect that to impact the sector? Because, obviously it's been in place for banks. Do you expect to see the same kind of results for super?
Yeah, I do. I think what we've done across a number of areas is going to lift the standard right across the industry. It's not super alone. Other parts of the financial services industry are also being brought within that financial accountability regime. So insurance, for example, is also being brought in. Absolutely important that all of that happens for the reasons we've just been talking about. But I think if you put a few things together, the new service standards that we'll be working on will be designed to focus on those issues of insurance claim handling, member communications, in particular, but they'll be designed in a way that enable us to scale it out over time. And if you add that to the financial accountability regime, there are real incentives on funds to get this right. It's perhaps understandable, but not an excuse, if I could put it this way. The funds for so much of the last 30 years have been focused on growing members' retirement savings, and they've put all their effort into doing a good job on that. And they have. What they haven't put enough effort into yet is ensuring that they have all the systems in place to be properly dealing with the service needs of their members. And that's where the big shift needs to happen. And that's where I've been absolutely focused on getting that push, first by calling it out, then by introducing new standards. And it won't be the last word on this matter.
And I would be remiss, just given where we're at if this month, to not ask you a couple of questions about the budget next week. Obviously, as I mentioned before, the federal election has not been called. It is expected to be called pretty quickly after the budget. Will this be a budget designed to woo voters? Is it an election budget? Or if not, what are the pillars?
This is a budget to continue the work the government's been doing about bringing down the debt that we inherited, rebalancing the budget and getting the finances back in order, investing in the things that are going to drive productivity and growth over the decades ahead to ensure that young kids entering the workforce today and all Australians are well set up for the future. So it'll be a budget which is about building our future, whether it's housing, whether it's industrial capacity, whether it's skills. All of those things will be core to this budget. We'll include the measures which are about removing several $1 billion worth of HECS debts from university students, and we'll include the provisions around fee-free TAFE because we think that's critical to building workforce capacity and, frankly, a fairer society. People of my generation didn't leave university with the sorts of debts that people of your generation are. So that's about intergenerational equity. So it'll include all of those things, but we're doing this in very difficult economic and international circumstances. There is no doubt that some of the policy decisions that are being implemented and the trade disputes that are going on in America at the moment are affecting Australians. And any Australian who's looked at their superannuation balance over the last month will have seen the very direct impact that protectionist policies and uncertainty in global trade and economic debates is having on them personally. We have done very well as a country over the last 30 years because we've been an open trading country operating in a rules-based order. The disruption of those trade arrangements and the dismantling of a rules-based order has a direct impact on every Australian, and the evidence of that is in their superannuation balance.
I mean, is there a way that we can possibly protect around that? I mean, obviously super funds and their investment teams make those decisions. Is there a way that we can ensure that Australians' retirement funds are safe from these big international factors?
Of course there are, and, obviously I'm not going to give financial advice, but there are measures that professional advisors and fund managers are putting in place to attempt to mitigate the impact of fallouts in global equities markets. There are measures that are being put in place and will continue to be put in place. But I guess the point I'd make is everybody is affected by the disruption of these international trading arrangements. Everybody is affected when there is a fallout in our global share markets, whether it's the Australian share markets, whether it's the American exchanges, whether it's the exchanges in our region. We're invested all the way across the board. Most Australians are. They'll have a mixture of Australian equities and international equities and listed and unlisted assets. We're all affected by these. We're all invested in these things through our superannuation funds. And when there's a disruption to the global economy, that impacts on our Australian economy. And I think it's in our national interests and in the interest of every Australian that we defend the fundamentals which have led to our growth and prosperity over the last 30 years, because it's in our nation's interests and it has a direct bearing on the wealth of every Australian.
Stephen Jones, thank you so much for joining us today, and good luck for whatever your next steps may be.
Great to be with you. All the best.
Thanks for listening to this Financial Standard podcast. For more information, visit financialstandard.com.au. Please keep in mind that the information discussed in this podcast is general in nature and does not consider personal circumstances. Reliance should not be placed on any content without further independent financial research and advice.